All right, welcome back into Market Day Report. I am Scott Shellady, otherwise known as the Cow Guy. Let's take a look and see what your markets are doing, because ultimately these markets are your money. All right, so corn table. Let's bring that up and see what corn's got in store for us. We're 5 3/4 cents lower right now. We're a penny and a half off the low of the day. 4.49 is the price. I guess you could say it's about what 7.5 cents off the high of the day. So we're kind of again slip sliding away. As you go out the deferreds, we lose a little bit more. Dees is down 7.5 cents. To 471 1/4, and that's a penny and a half off the lows out there, and we've had about a 10-cent range. Moving over to the beans, what's happening with soybeans? Well, they're lower too by between say 4.5 and 6.25 cents. 4.5 cents lower in the July to 1209.5, and that's a tick off the low of the day, and about 11.75 cents off the high. If we move out to the Nove, this is where we really start to see some damage. 6.25 cents lower there in that Nove to 1190.5. That's a new low of the day, and that's about 11 cents off the high. That $12 handle, that's in the rear view for sure right now. Let's take a look at wheat in Chicago. Chicago wheat's off between 13 and 15 cents. 15.25 cents actually. We're lower in July. 677.5 is last there. And again, well, I guess the good news is we're only about 4.25 cents off the low of the day, but we're well off the highs of the day by about 16 cents. All right, that's July. Let's go out to the D. That's down 14.25 cents to 722. That's Chicago wheat. Let's go to Kansas City and see what the hard red's doing. That too has got some double-digit losses. 12.25 cents lower in that July. The 707.5, and that's 3.5 cents lower. 3.5 cents off the low of the day. Sorry, and we're well off the highs by 13.25 cents. If you go out to the D, that's 12.25 cents lower to 738. That's the price. And again, 2.75 cents off the low of the day. 13 cents off the high. That's hard red in Kansas City. Let's go take a look at Minneapolis and see what the spring wheat's got for us. That's an 11.25 cent loss there to 740.75, a penny and 3/4 off the low, and about 12 cents off the high. If you go out to the D, that's down 10.25 cents to 765. Finally, let's check in on cotton. We'll get to our guest analyst. Cotton's going to be what? Down 352 points. Ouch, he says. 77.58 is the price. 197 points lower in the D's to 76.13. Let's bring him in. Everybody's fan favorite, the venerable Tommy Grisafi. He's with Advanced Trading, and he's coming to us from Valparaiso, Indiana. All right, Tommy, if you're a buyer, it's not giving you any reason to rush out and buy it, is it?
No, Scotty, there's double. Can you hear me okay? I'm using a new little mixer here. Can you hear me?
Yeah, it's great. I mean, that upgrade.
I have the same camera and you look the same. Nothing changed there, just a new mixer on the audio. Listen, I'm trying to be optimistic and happy because I know folks are bummed out looking at these markets. You got double trouble if you got old crop problem and a new crop problem. I've been bearish for a long time, and that rally really, that was pretty intense there for a few days. People, if they were short futures, heavily short futures, they had to make margin calls, especially in wheat. Wheat has now given back about 1/4 of the rally. It's lost about 40 cents. I could see it easily losing another 40 cents in the next few weeks. If people are just calling in now and saying, did you hear there's a drought, or did you hear there was a frost in Russia? That's old news. These are futures markets. They like to get ahead of things. Someone called last week. I did a podcast with someone, and he said he heard some of the worst words he could ever hear. 2 clients called within an hour and said, we need to lift our hedges. This baby's really going to go. Whenever anyone says this baby and it's going to go, when it comes to grain hedging, you got a problem, because you work so hard to get these hedges on. And then when they go against you, they're not really going against you. It feels uncomfortable, but margin calls do have to be made. Now we take off this selling like we're doing today in corn, beans, and wheat, and you wonder, are the highs in for the spring? Typically, most often, statistically, we make a pretty good high in June. If we don't get some really bullish news in the next few weeks, the spring highs could be in. Back to you, my friend.
Yeah, I mean, like I've said to a few analysts, I mean, if this is a card game, Tommy, and we had that card that said big short cover by the funds, that card's been played. All right, so now what's the next bullish card in your hand? And I mean, everybody wants to say weather, but I struggle to see it to be in demand, because I mean, China hasn't bought any new crop beans yet.
That is correct, and several great analysts have pointed that out. We have to have buyers of our product. We've seen some good buying from Mexico and whatnot, but there's other things. The drought map comes out every Thursday, and you have some talented weather people there. All they keep saying is storms this day, storms this day. Now, with that, there is going to be prevent plant in pockets.
Yeah.
The question is the 95% of the crop that was planted in okay enough shape to get a great yield? We never do harvest 100% of the planted acre, Scotty. And that's a shell game the USDA likes to play.
I got you. All right, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Tommy Grisafi. He's with Advanced Trading in Valparaiso, Indiana. We're going to talk livestock right after this. All right, welcome back. Let's talk some livestock here. A little bit of a kind of a negative feeling over there here today as well. Some money's moving around, folks. That's definitely for sure. Let's talk about live cattle. June's down 85 cents to 182.50. And we can say that's 62 cents off the low of the day and about $1.20 off the highs. Moving out to say even the December, that's down $1.22 to 185.27. So that's live cattle. We're off anywhere between say $1 or 87 cents to $1.22. So that's kind of trading heavy as well there. The feeder cattle, let's take a look at that. Yeah, down $2.30 in that front month August. 257.95 is last. We're still 95 cents off the low of the day. But we're also well off the highs by about $1 as well. So we're in the middle of that range as we speak. How about Nove? That's down $2.05 to 260, spot 20. And then finally we'll get lean hogs up and running and we'll get to our guest analyst. We have a little bit of a rally over there, so that's good. June's up 87 cents. This is lean hogs. 94.65 is the price. 35 cents off the high of the day. We've had about $1.50 range. October, that's up 27 cents to 82.52. And again, that's only about 15 cents off the high of the day out there. All right, let's bring him back in. Mr. Tommy Grisafi. Tommy is in Valparaiso, Indiana. I know where that is. It's a great little town, home of Orville Redenbacher, I believe. And then if anybody even knows who that guy is anymore, I don't know. Maybe it's just...
No, they do. They do. Yeah, okay. They still have Orville. We have the Popcorn Panic here every summer.
The Popcorn Fest, right?
Yeah, Popcorn Fest, one-day event, Valparaiso. You could stay at my house. Well, I'll stay in my mother's basement.
I'll bring my sleeping bag.
Yeah. All right. Listen, real quick, this is important. It's important people watch Cow Guy Close at 1. And I'm not saying that because I'm on it. I'm not saying it because I like you. I'm saying it because you've been sounding the alarm that there could be something going on with the credit cards maxed out. X amount of percent of credit cards are maxed out. If the Dow Jones doesn't hold 38,000 here, it's going to start feeling like, oh my God, the markets were here. Now they're here at the end of June. We're going to all look at our 401ks. That'd be the end of the second quarter. We just hit that peak grilling season, and there could be a little problem here, not just in meats, all markets. We're about 165 days away from the election. This administration should be highly motivated to do anything to get these commodity prices to calm down, whether it be fuel or fiber, whatever, food or fiber, because they cannot stop what's happening in the bond market. The bond market sounded the alarm yesterday, and every single person watching this show should ask you, Scotty, what's that mean? So I'll do it for him. Scotty, what happened yesterday in the bond market?
We can't sell our bonds because our economy is in such a state that the trust level is eroding, put it that way. So people are demanding more of a return for the money that they lend us by us selling them the bonds. That's the bottom line, basically. So that's going to be bad. And going forward with the debt that we have here, you're exactly right. Our interest rates on the money that we need to borrow to keep this country going are going up almost on a daily basis. And that's something. And so what we have to realize is that cutting rates ain't going to cut it because that's just going to make inflation worse. So they're in a spot and they can't get out of it anyway. This is going to go on at least till November. But I appreciate you coming on.
We got to go on break. You've been a great guest. I'll have you back.
Take it easy, brother. That's Tommy Grisafi, Valparaiso, Indiana. He's coming to us from Advanced Trading. All right. So now that we've got that in the bag, we're going to go away. We're going to pay some more bills, and we're going to come back and talk more right after this.